Welcome to a new update, and today we are going to look at the markets. It's a short update, it's Friday, it should be the altcoin portfolio update, but we are moving that towards Saturday because it's a weekend day, and then I can be talking a little bit more about altcoins overall. So today it's a short market update before I go on holiday. I'll be on holiday for the coming 2 weeks, which means that there won't be an update every day. But once I do update, I try to bring value towards you when I think that there's something happening. Next Wednesday, it's also FOMC meeting. If everything goes well, I'll be trying to go live during that day to provide all the information that you must be having when it comes to the Fed meeting. So I'll try to do my best, but I'm definitely trying to make as much content as possible and still enjoy my holiday. Before we continue, make sure to hit the like button, subscribe to this YouTube channel. Also check out my free trade letter today. It's Altcoin Friday. I've been giving you all information on the markets. As right now we are slightly consolidating. We're going to look at the Bitcoin price action soon. And also finally make sure to check out my premium membership, which you can find in the platform, and the link is beneath. And from next week on, you are able to whitelist yourself for our course. I finalized the documents, so we're going into the next stage, which is a feedback gathering, and I'm projecting to launch my beginners course, which is going to contain around 6 to 9 hours of content around crypto, blockchain and more. Make sure to check out my socials, as I'll be launching that soon. When we're looking at the markets, there's not much happening. We had the entire day yesterday in which we had unemployment claims, which was more positive than expected. If you want to see the economy fall apart, you definitely want to see this one continue the rally. We had the ECB continuing the rate hike policy, which means that they actually are going to do QE next to hiking the interest rate. So they are doing the QE part, which is they print money to help banks and such. As they are currently doing that by 2 to 4 trillion in the US as well. And in the meantime, they continue the hiking policy, resulting into a conflicting theory at this point, but it's resulting into a case where we probably will maintain the high inflation rate, and we will be having a case where the debt markets and real estate markets are getting into trouble overall. Today we had the consumer sentiment, which inevitably starts to drop. Last time we saw such a big miss was actually taking place during November. It's not too much of importance at this point, but also the inflation expectations have been dropping a little bit. So that could be a grand opportunity for the markets to actually start running from here. So let's have a look at the US dollar first. The US dollar is still stabilizing. I've been mentioning this scenario in which we most likely take liquidity, get into the resistance point and start to fall around. When we're looking at the 2-year yield, we are consolidating here, and most likely the yields are going to bounce up if nothing strange happens to the markets when it comes to banks collapsing. Then probably the yields are going to rally up, as I suspect that Powell will continue hiking his policy and at least hike by 25 bips, which means that we have a little swing to the downside on the yields, and probably are going to get a bounce back up until he starts to pause or pivot. So I think we're going to have a slight bounce here. The 10-year yield is showing the exact same figure at this point, which as a result is on the edge of support. I was marking this level here previously and we rejected from there, but I also believe that we have a short-term bounce here before we start to fall down even more. And as I said previously, a dropping interest rate, a dropping yield is not a guarantee that we're going into a bull cycle, but now we are into a vacuum that can result into some upwards pressure. So take it as granted, make sure to take your profits and move out, because we are on the edge of having a substantial and large crisis. Looking at the indices, consolidating, good rally yesterday out of nowhere, and now we are breaking back south again, through which we're just chopping around. Probably will be having such a chopping period overall, as gold in the meantime, as there is lots of uncertainty, starts to break out and make a new yearly high. Actually, it's the highest point since April 2022. So the entire bear market has been reversed when it comes to gold. I still advise you to have gold in your portfolio. Looking at Bitcoin, we can conclude that Bitcoin has made a beautiful breakout, but it felt a little bit trappy at this point. What do I mean by trappy? The daily outlook looks like it's extended to the upside and that the liquidity has been grabbed there. So most likely we need a little bit more consolidation before we can have continuation on the market here, resulting in the case where we are currently having this extended move, but we need to have a little bit more of sideways action before we can continue. What is the crucial pivot? The crucial pivot is the area around 25k. Today, however, and I've been making that in a different chart, we have established ourselves a bearish divergence. This bearish divergence only becomes valid if you start to make lower highs and lower lows. However, you have to take it into importance given that we are reversing the entire 4-hour candle here and are making this bearish divergence, implying that we most likely are going to see a fake out above this range high. This means that I think that the odds of correcting are there. I've mentioned it yesterday that before the Fed meeting we most likely are going to get a correction and then start to rally after. However, we had a pretty substantial breakout today, resulting into a giant move. As we can see, the crucial level was 25k. We broke through it, we took the liquidity above the highs, but we are immediately falling back beneath the previous high. Crucial level right now is the area around 26k. If that level is getting lost as well, which we can see on the 1 hour here, we take the liquidity here and start to fall. So if we lose 26k, which I mentioned before, I think a lot of stops are here, resulting into a fall towards 25k, and then we are looking for longs at 22.5 to 23k. If you do contain or sustain above 26k, I think we're going to continue moving here, which ultimately results into continuation towards 28 to 30k, and then I look for the same ingredients as right now for potential shorting opportunities. I'm not shorting, I'm looking for entries, and those entries are found at lower levels. If we're looking at altcoins, we can see the exact same point at this point. Heavy correction taking place, erasing the entire breakout at this point, through which the daily candles also not looking too great. That's the update for today. I'll be back tomorrow with the altcoin portfolio. Make sure to hit the like button. Ciao.